I'm just gonna turn this on a little early, but that's all right. We can dig around. But anyways, yeah. So, crazy start to the week, no question. I think. So I still got my charts up. I still got this trade on right now on Pfizer. So I don't like starting a stream and I'm like, I got a trade on. I'm like, what am I gonna do? All right, the bracket order. I think I'm gonna change this bracket, the lower end of the bracket, to like a trailing stop. It's up, but not a ton. Is that Monday IV, man? Off the hook. We got oil moving. I think biotech, we saw Moderna, Pfizer. Probably should have sent that. I mean, even the trade I had lined up wouldn't have been that great here because I didn't expect it to explode that much. The Apple kind of bouncing. So pre-market levels is what we are looking at, generally speaking. But all right, let's do this. Let me load her up. All right, so if you're new, and I think we might have some new people, but every Monday, Steven and I, who's also online, we trade together every day, pretty much for the last year or so. Except he's leaving us today or this week, so it's all good. I'll be all right.
I was gonna say
trading is a lonely profession. I'll just say that, right? It's a very lonely profession. So I appreciate everybody. Anyways, so every Monday we go through and just do a quick look at what some of the headlines were for the weekend, and what are some of the economic events that we should be looking out for the week ahead, and kind of planning out our week. We'll go over the major indices and some of the major ETFs, etc., that we should be looking at for the week, or that we believe we should be looking at to tell us like the story of what's going to happen, and point out some key levels that we'll be looking for, as well as maybe a couple specific stock watch lists. If you guys have anything, just go ahead and type it into the chat. I know YouTube's a little bit delayed, but that's fine. But yeah, if you want to take a look at a tick or anything, type it in the chat, and we'll get to it towards the end of the I almost said show, but anyways, yeah. If you're new to this, I think that if you subscribe to the channel, then you'll get notified when this goes every Monday. All right. So before we get started, just got to point out we are an options trading group, and options are not for everyone. So before you start trading, call 188 options and get a copy of Characteristics and Risks of Standardized Options. That's our disclaimer. So real quick recap for the week. I was looking this morning. I was like, whoa. So I caught a headline that China, I forgot what the Hang Seng whatever index was limit down to at the open. I'm like, that's intense. But hopefully we don't have that anytime soon. You never know. It's been a wild and crazy market. That is for sure. But yeah, I wouldn't be going long anytime soon on China. There's just too much risk. And there was this JP Morgan throwing in the towel on Chinese names today, and moving all of those stocks to underweight. I remember having an argument with I don't know if you guys know what a RIA is, or registered investment advisor. They don't have like any trading. It's different. But they were trying to tell me to put stuff into Chinese stocks. I'm like, talking about it's a bargain. I'm like, dude, you have something seriously wrong with you. Like, there's just way too much risk. But unfortunately, there were a lot of firms saying that to a lot of people. And these are firms that don't handle small amounts. Like you have to have like 7 figures or something in their accounts to be able to hold that. But yeah, this is the major funds. For a long time, they were saying, hey, look, Chinese stocks are at a huge discount, which if you looked at it from a Western perspective, that would have been true. But the thing was that they don't think that way. China, like, culturally, stocks are not investments like they are for Americans or even Europeans per se. They do that with real estate. They trade stocks. Otherwise, a couple other things. So Russia reached out to China over the weekend, I think it was, for help. And there's no real news on that quite yet. I think it's mostly just neutral. This was CNBC's headline this morning, that they're probably just going to do whatever they decide to do, as long as it benefits themselves. There was a lot of headlines on India this morning. I don't know what that was about, but I think a lot of this, are they going to be continuing to buy Russian oil, etc.? That's been in the question. Occidental had a huge run. A lot of the oil stocks had a huge run. I know that there was that big sale from, God, I never remember his name. I think he has like a like Pershing Square. Who is that? Forgot his name. Anyways, but Buffett also buying at the same time. They kind of canceled each other out, but it still rallied quite a bit. Latest update is that Buffett's still buying. We'll see what that does to the share price. I think oil right now, we'll go through some of this, but oil right now is going to be likely in a hold mode. I don't think it's necessarily going to dump, but I don't think it's going to be flying anytime soon either. That said, a lot of the oil stocks will still be moving. That's my guess, just because they're kind of a safer play right now, so they'll have a lot of dividends. They're all being run a lot better than they had been before. So it's a pretty big market shift. I was listening to the news this morning. Someone had a new FANG acronym. It was like fuel, agriculture, nuclear, and gold and other commodities. I was like, dude, that's legit. So anyways, that we might hear a little bit more of that here and there. But that said, I didn't have an update on this one. We're still at 29 of the top 30 Dow stocks having reported, I believe. I could be wrong, but either way, if it was like one more, it wouldn't be a huge difference. We're slow. So here's the trend, right? Top 30 Dow stocks, Dow 30, Q1, 2, 3, and 4. So these are the last 4 quarters of their net reports. I think a lot of people have been talking about, are we at peak earnings, right? I don't know if we're at peak earnings or not. You never know. But what we're not getting is we're getting a lot of beats, but not major raises anymore. I think, who was it recently? Someone just recently reported, had a great quarter. God, I forgot who it was. Oh, I'm having a brain fart this morning. But they didn't guide up. I think they actually guided down, and that'll hurt the stock. So remember, if you're trading and you own any of these stocks as they report, and you wonder if they beat even by a huge margin, you might expect the stock to go up, but that's not how stocks work, right? So stocks are not valued based on what they're doing today. They are solely valued based on what the market believes they will be worth in the future, and the future is like 2 years out. So if they're beating now, but they're not going to be doing the same in about 2 years, don't expect the stock to go up. That's just not how it works. It's just, what's the upside from here, right? So if this is the peak, then this is the peak. What you want to look for in terms of finding a bottom in a market like this, we want to see stocks that are completely missing the mark and going up. That's gonna, I think I just had an order. That's actually going to be the biggest. Oh, that was you. I think that's gonna.
I didn't send anything.
Why do I have orders going through? I don't know. Something's hitting. Anyways, that's what happens when you get all this stuff on. Long story short, yeah, the signs that we want to see are like, stocks missing and going up. That's typically the bottom or the end of a cycle. Let's say I haven't updated this one. I keep missing this one. So this week, what I'll tell you, don't look at this right now. But for the week, Wednesday, 100% going to be the absolute biggest day of the week. So Wednesday, we're going to get in, and coming into Wednesday, it's going to be a little choppy. We're going to point out some levels on the indices, and I think if you want to put the odds on your side, what I could say is that buying at support in a downward trending market is not always the best thing to do. Even like, especially something like selling puts. And I know that the VIX is really high right now. We're sitting at 30, just over 30 right now on the VIX, which is the S&P volatility indicator. Yeah, you can get yourself in a lot of trouble doing that. So I would refrain from doing that. If anything, think of selling upside calls around resistance levels. That's going to give you the best edge in a market like this. So today we don't really have a whole lot. We had consumer inflation expectations. By the way, all the times I'm on the West Coast, so all time zones that you see in this presentation are Pacific Standard Time. So adjust for your time zone. Consumer inflation expectations today. I don't think that's. I mean, what we're not gonna. They're expected to go higher. Let me see if I can. Oh, actual came in. Actual came in at 6. So that did just come through live. And again, as we look at this stuff, the consensus 5.9, previous 5.8, actual comes in at 6. That is not going to be a market moving event. What will move markets as you look at this kind of economic data is things that come in vastly different than what's actually expected. So tomorrow, for example, we do have pretty important numbers. We have PPI. So when we look at PPI or PCI, PPI, by the way, is Producer Price Index. PCI is CPI. Wow, is the other one. CPI is Consumer Price Index. And so if PPI is Producer Price Index, the market will actually look at what the producer's inflation rate is. That's what this is, and assume that it will trickle down to the consumer price index, or i.e. CPI, also consumer inflation. So inflation's the theme of the year, probably, unfortunately, and so this is a bit of a leading indicator into what's to come for the next consumer price index. And again, there's standard and there's something called core on both of those two numbers. Core does not include the stupidest things, does not include our biggest expensive like food and oil for whatever reason. I think that's dumb, but it is what it is. And core CPI is what the Fed really monitors very closely to gauge inflation. And again, their target is 2.5% inflation, and we are way over that. Redbook sales, if you're not familiar, these are retail numbers. This is year-over-year growth for same-store sales. It's kind of a leading indicator in terms of retail sales coming out later in the week. Retail sales right now, I don't think are really moving the market much. They used to. They may if you're in a retail rally, but we are not at the moment, so I would not be super concerned with that. Although it is, 13% up, that's great, but our profit's up not that much now. And they're not outpacing inflation. Actually, when you're looking at your companies and your stocks and you're looking at what do I do with these kind of numbers? That's, 13% up in revenue is great. Maybe gross profits, gross margin is up, half of this at best. But inflation is up, 8 something percent. And so is the profit outpacing inflation? That's what everybody's going to be looking at. And right now the answer is really no. So once that flips, then it might be a different story. But we're waiting for a peak inflation. We're really waiting for a crazy high CPI number to come out and the markets to go up. Like that would be a good sign. That would be like peak inflation. Net long-term inflows, actually, so the TIC is Treasury inflows. So we'll get a look at like how many bonds are people buying. This was the last number. Overall net capital inflows will come out. I just thought these were good numbers to have. We haven't had this. I haven't put this up in the past, I don't believe. Net capital inflows are for the market, right? So what overall net treasury, sorry, I wrote this down somewhere. Anyways, so we want to see, are people buying stocks, or are they selling it? So right now, outflows. Crude oil stock change. This is good to put on the radar now. Not typical, but right now I have it on. This is about our stockpiles. What's this called? Strategic reserves. And so right now we had we had an increase of 2.8 million barrels in the week. And then see how many barrels of oil does the U.S. use? And we use, oh, look at that. Here you go. Just quick, uses 19.7 million barrels per day. So this is the kind of stuff that I'm always looking. I'm just, if we use 19.78 barrels per day, or 7.2 billion barrels in a year, and what we're adding is like 2.8 million barrels. Like, a lot of the media places will say, "Oh, this is great. Our oil reserves are climbing," but look at how far apart we are from what we actually use. It's pretty crazy. But yeah, most people don't really notice that kind of stuff. So that's what we point out in these things. Wednesday, this is our biggest day of the week. So Wednesday, huge economic data day, and meetings. So again, times here are West Coast, right? So Pacific, so adjust for your time. 10 a.m. Pacific is going to be 1 p.m. Eastern, and this is when the actual Fed rate decision comes out. So the last one was 0.25% increase. He literally said it's going to be 50 basis points or 0.5% higher in the rate. So why does this matter, right? So in terms of inflation, this is the Fed's one and only tool to try and control it. So if rates rise, then yes, spending slows down. Inflation happens when there's a lot of spending, and that weakens the dollar, right? So they can print as much money as they want, velocity, or like how much we're spending. So if I had $1 billion, my country had $1 billion initially, and then I printed another $1 billion, but nobody's spending anything, and I owned a business, am I going to be raising rates or raising my prices or lowering prices? And nobody's buying. It's not going to change anything. It's all about how much are they buying. If they're buying a lot, then I can raise my prices. If nobody's buying, then I have to lower my prices. And so they want to slow the speed of spending. Error, YouTube is not receiving enough video to maintain smooth. Okay, hopefully that doesn't mess up the YouTube. So that said, export. So that's what that's about, right? That's why this is super important. How are they going to control inflation? We do get retail sales in the morning pre-market. Again, I really don't think it's going to be a market-moving event. Export and import prices are going to be on the radar, so I started putting these on. Typically, the U.S. is a net importer of goods. Looks like we're starting to switch that right now. But historically, we've been a net importer, so that's like our reliance on external, for oil, energy, those kind of things. But again, this is our biggest day, so be careful, be cautious. I will not be having a whole lot of trades on coming into this event. I might trade after it, but just keep in mind that's what's going on. So Wednesday, the biggest day. Thursday, also big day, not nearly as big. And oh, by the way, I have earnings down here at the bottom. We are pretty much done. Earnings season is over. This is our biggest earnings day, so it's very slim to none. Pre-market, we get housing starts and building permits. This, I believe, is the building permits number. Again, not anything that is going to be market moving right now. Initial jobless claims, probably not too big. And industrial production year over year and month over month. This is going to be the bigger numbers for this day. And again, 5:15 a.m. Pacific time. So adjust for your time zone. That said, what we want to see is GDP growing. And if oil is rising, then that used to mean that GDP would be dropping. And it doesn't necessarily mean that now in this environment, but we want to see our production going up. That's ideal, and it is right now, just to keep everything steady, Eddie. Friday, last one. Again, not a huge day. Existing home sales, so that's cars and homes are our biggest costs, and that's the biggest things that are being that is affecting inflation. So this we do want to keep an eye out for this. Baker Hughes rig count comes out every Friday. That's the total rig count. They separate it by oil rigs and all rigs, or including nat gas, etc. That's a pretty big thing on the radar recently, so keep an eye out for that. I expect more rigs to open, so the more oil rigs that they open at $100-something a barrel, why wouldn't they? Like that would be increasing supply in the market, so hopefully stabilizing that. And then we have 1, 2, 3 Fed speeches on Friday. So again, choppy day. Friday, I would expect. Don't know how we're going to come in through the week. Maybe we trade bounce into Wednesday, maybe, after a bit of a sell-off this morning. Just market thinking it's overdone, and then fade out the rest of the week, like a slow burn is what I would guess. But yeah, so that's it for economic data. From here, we'll actually go into, I don't need this, go into the indices. And so this is the first, and I'll typically have a 15-minute or let's go 30. 30-minute look right now. Oh, you don't need that. I had Bitcoin on here. I don't think that's market moving at the moment. What should I put here? I'll put crude oil futures. So, yeah, $100 barrel. That would be psychological support at least. Let's see, what is this? This should be the keys. All right, so 1, 2, 3, 4 major indices on deck. Always first check when you come into the market, right? So this orange box, I can take this off. This is actually these lines right here. These dashed lines are fundamental events that create technical levels, and non-farm payrolls, FOMC things, those would qualify. So non-farm payrolls comes out last week, on the 4th, and we fail right here, 432. So that typically sets the tone for the month. Until we can get above this 430, gosh, I would like to be, until we can, I'd call it 435, to be honest, just to be safe. I have no real interest. Yeah, I'd say 430, 435.70. Do you have a level on SPY, Steven?
That's about what I have too. Yeah, about 430.
Yeah. So until we're above that, I have zero interest in being long this index. I'm not necessarily short, but I have zero interest in being long in any capacity. So that said, these orange boxes, markets typically do not move more than their averages. Although right now with the VIX trading at the levels it is, they may move slightly more. So that said, this is a typical week, right? If we were to go and dump, let's say here's the open, right? To the downside, a typical week would be 407, just slightly below the prior 410 bounce. I'm just going to grab this level and throw a horizontal across just to see if this tags anything. No. Is that a gap? Do we have a gap at 403? Or a gap at 400? Who knows? It is a daily gap. Man, I didn't notice that before. I'm going to turn on my after hours real quick just to take a look, because that's a big deal. Oh, shit. That's a gap. All right, so here you go, short-term target. I'm going to say gap fill. Boom. That is a legitimate unfilled gap. Huh? Is right. Neither have I. Okay. There. You heard it first here.
How we do this?
Yeah. All right, so that would be, you know what, 400. It's a nice round number. I would not put it past the indices to make that the level. Could that happen this week or next? Yeah, it totally could. Totally could. That would be another 5% down. So that said, we do also have this pretty epic broadening formation, which is typical in these kind of markets. So if we go down and we tag that, don't be surprised to see the market way back up here in a week, right? That's how these things work. So play both sides. Right now, I think we're more neutral than long for sure. But if I were to tag this, let's say this ends up being the high, 425 for the week. Yeah, 410 on a short-term basis this week tags this prior low right here. I think that's more than reasonable for this week's target. Anything further out than that, I really wouldn't do. Trying to speculate on long-term options with the VIX over 30, be very careful how you do that. Just because you get the direction right, those are the situations where you might not actually make a whole lot of money, or at least diminishing returns. So same thing here on the Qs, right? This orange box average week range, we are in a firm downtrend. So let's say right here 4 or 330. This is probably the worst sector, right? The Qs tech absolutely hates inflation. Just highly levered names, meaning like they take a lot of loans out. They just can't. How do you say? If you have to borrow a lot of money and then all of a sudden your interest rates are going up, the money that you have to borrow costs more, and you're fighting inflation at the same time, so your profits are worth less and your costs are going up. It's just like a triple bad scenario. So that's why high growth is not, and I repeat, not the place to be, even in this kind of especially in this kind of environment. You might be able to get some bounces off support, but again, until you have a trend that is not, look at this. How could you possibly be bullish on this? This is nothing but like succession, like lower highs and lower lows back to back to back to back. I just, yes, we're basing, but does that mean we're gonna bounce? No, it really doesn't. Just be careful. It's tough, very tough. You know, long term, just wait till you see an uptrend. It's better to do that than to try and catch a falling knife, generally speaking. Sorry, not technically financial advice. How's that? But yeah, we have two prior lows like well within sight even today. To be fair, at 320, right around 320, we break those. This is gonna be a falling knife. Wow, that is bad. Where does this put us? So if I'm gonna do the same thing and kind of pull this across. What do I do? Alt H, and I'll see where it does. Do we have a level? Yeah. I mean, we based right around here, 308. We might be able to go lower on this one. Oh, my Pfizer got to 93 and then fell out.
Oof.
Oh well.
You got stopped?
Yeah. I blinked. Well, I knew that could happen. So hopefully you got out. Anyways, 300, probably a decent psychological level, just round support, round number. I don't see anything major other than this kind of like this was a prior chop zone. So there will be likely some previous buyers that have memory of buying around that level here, and then 320 will very likely be your resistance once that fails. So that's how we do it. The diamonds, industrials, not as bad, more basing. So again, prior week rate or average week range here, that would put us just, if we test these lows, yeah, I might be a short-term buyer just on a bounce, maybe like some quick scalps, something like that, small trades. I think generally we're going to be range bound for the most part. But again, like if I want to put odds on my side as a trader, I know that support and resistance hold about, 67, 68% of the time. So that's an edge. even though it's a small one. It's an edge. Take it for what it is, and then if you can add some edge using option strategies, that's even better. So I'll pull this back here. We did have this little gap filled, and we're on it. So yeah, like this is a pretty potential bounce level on the diamonds. I mean, low end 320 short term. You got this nastiness, whatever this is. I don't know. I'm not really going to get into that yet. But that said, again, if you're trading to the upside, just know you're fighting the trend, right? Can you make money? Yeah, for sure. But wait for a breakout or something like this. You got an inside bar today, so maybe tomorrow you'll get a clearer direction. That's what I would see there. So back to my 30. If I were going to do anything, I'm feeling like this is where I would be. This guy's ranging. We should probably throw some iron condors on here because the IWM likes to go sideways for the longest time. But it does what it wants to do. It doesn't necessarily follow the rest of the indices. And this is more or less your small cap index. So reopening of the economy, all the companies that were really beaten down and shut down on COVID, this is them. We get a little pullback right now. But to the downside, yeah, if we get, what is this tagging? 187. 187 on the downside. If you set an alert there, which I will here, and then you see it to start to bounce, that would be an edge. But I'm not going to take it just because it's here. I want to see some kind of reversal happening. And if I pull this back, does that line up? Yeah, right here. So 180, 188, 187-ish level. I like that on IWM for a bounce. Okay, so those are the major indices. So from there, you kind of go in and you say, okay, these are, if I like small caps the best or I like industrials the best, right here, I don't really like much of anything. Maybe you want to go short, but you look at who's the highest, we say, beta in the group, or your best of breed if you want to do some kind of swing trading, and you kind of hone in from there. So that said, we want to take a look at oil. So we had a breakout level oil right around 90. We're sitting back at 100, which was initial breakout here. This is like very easily could be a bounce. But the real support on oil is not, in my mind, not until you get down to like the 85-ish level, and then really around 80. So just be cautious. It could come down to that. We got a little blow off top, but I think most of the economists and stuff were actually predicting we'll chop right around 11 for the rest of the year, or right around $1,000 or $100 a barrel. TLT, this is what I call the long bond. So 20 plus year treasury bond. So this is an inverse relation to rates. So bonds or rates go up, bonds go down if it's inverse. So where are rates going? Hence the sell-off. What's a little funky with this one is that it can get oversold. So the Fed does not actually control rates. If that makes sense, they control their rates, but the market has their own rates. So the market will anticipate moves just like normal, and they will start to increase interest rates faster than the Fed does to try and force his hand or their hand, what have you, or just really just anticipating what they see might be coming. So to me, this is saying, okay, he's saying that 50 basis point rate is going to come. What we would want to be aware of, and this is what you want to watch for your major indicator this week, is if Powell comes out and says something like, oh, well, inflation's higher than we really thought, and we're going to have to do bigger increases than we had planned, well, that's going to be a market moving event, no question. And that would, I would expect, flush out cues, and we would hit a lot of support levels on some things. It will likely be a quick overreaction with like a little dead cat bounce and then stabilize from there. But yeah, that would be the one thing that could happen this week that would really like throw markets on their head. Other than that, we are 125. I remember 125, 115 in the good days is where I remember buying TLT back in the day. So that might have been right around here. And yeah, so bonds will act almost like equities themselves. So 130, we have support on TLT. Not that that means a whole lot. And we're pretty close to it. So do I want to go short TLT right now? You got to say, what's your risk reward ratio, right? Like, how much further down can it go in the short term? I don't know. It might overshoot, right? But I'd rather be short up here closer to 140 or even 138 maybe at this point, and and take my shots there, rather than, well, it's so close to the bottom. It's almost like shorting crypto right now. It's like, yeah, I could, but it's what's the downside? GDX, this is GLD, GC or CF? No, GF. What is GF? Is futures. Let's just go the legit commodity. So huge, kind of like top, right? 2000 we know was gonna be like psychological resistance. But watch this. We'll pull this out. This chart is ready to blow for sure. So absolute clear break in trend, right? We've had this. This has been my chart for the last like 2 years. We've been waiting for this breakout. Call me crazy, but it is what it is, right? So 116 in change on gold has been a huge level. So this was the buy level, and we're now breaking out. You know, this is a very typical pullback on something like this. I do have some things triggering stops, but yeah. So this drawdown, I want to see it kind of pull in. If we get it tagged back around 18 and change, I think that is where I would start nibbling again. But yeah, more or less a net seller for the most part. Or, you know, if we do get a breakout above this 2075 level, that's when the next parabolic movement would likely happen. But for now, expect this kind of range to chop, if that makes sense. I'm not going to be going super crazy long gold or silver right now, although I do have some positions, but they're kind of range bound positions. So same thing, right? These guys will pop pretty heavily too when it does happen. So we're getting close on silver. This is a similar chart, but yeah, we could pull back to. By the way, this is the ETF, so it's different price than spot. They don't actually align that well. 2250. 2250. I'll be looking again to go long. And so the VIX. So VIX is important, right? So what am I doing on the VIX? So the VIX here, this is your gauge. VIX it's not a dollar amount. So if you hear people say $30, that's kind of, you know, it's 30, right? It's just an index marker. What I want to see right now is the VIX trading below 28 to start putting some hedges on, and that would be like a ratio trade, like short 1 call, long 2 calls above. For free. That is the staple VIX hedge, tried and true. But with the VIX at these levels, putting it on now makes it tougher to find a good match. So be careful with some of that stuff. You might be able to catch some pops here and there. But yeah, above 40, probably can do some nibbling for some short-term bounces. In the interim, trading above 30, we as option traders know that that's going to be situations where we would rather, it would be more beneficial to sell upside calls rather than buying like, sometimes downside puts are okay. Here's the thing, buying downside puts for day trades, oh, absolutely. Because intraday volatility isn't really going to be that big of a deal, right? It's a totally different thing than what this is measuring. This is measuring something else. So don't worry about day trading. Swing trading is where you want to worry about it. But if if the market's selling off and you're long puts, well, and volatility is going up because the market's selling off, and you actually get a little exponential kick. So not so bad from a short-term trading perspective. Just got to be quick with your profit taking for sure. I expect this to kind of pull back somewhere around 28, though, this week, most likely. And that's where I might be looking for some bounces, but who knows? We'll see how this goes. This is not looking good so far. So second chart that I look at, or that you want to look at as a trader, that's the first few. And then you have like what's subsectors. So it's specific ETFs, and these are on my radar right now. Hopefully this isn't too bad. So right now, yeah, I'm looking gold. I got retail, semis. OIH is oil services. This is probably my biggest position, although I just trimmed the crap out of it recently. IBB is biotech. This is something that's been on the watch recently. I think that's going to be fairly market independent. Energy is here, XLE. XOP is oil services. So there's different, or oil exploration and products. So this is like, XOP is like your Occidental. OIH is like your Schlumberger, Halliburton services. So they're servicing the oil. XLE is like your Devon Energy. After a while, you'll get to know who's your biggest players, right? Everybody knows who's the bigger players in SMH, NVIDIA. So retail, unfortunately, retail, this is like GME, Costco, that kind of stuff. GME goes in there for sure. I'm going to take that off, and I'm going to go XLV. Healthcare tends to be a market independent. Won't really be affected in something like this. So if I might look somewhere, I might look in a sector like this. XLV, healthcare. I know United Health, that's your go-to. Consumer staples has taken a huge nosedive this last week, which I wasn't expecting, but they did. So I have it on watch right now, and I think this biotech could have something to it. I'm not quite sure yet. GDX is the miners. So for me, GDX is gold mining ETF. With oil prices coming down, inflation still rising, and gold, silver, etc., potentially going slow chop higher, that's the best case scenario for an index like GDX. So if you were to ask me what index am I building right now, this is actually it right here. Yeah, I just, semis, look at this, just dump city. If you hit 52-week lows, yeah, you could probably expect some intraday bounces, but I got nothing interesting here. Oh god. Let me go index ETFs. So just to see, okay, so Dow, yeah, XLV. All right, healthcare was probably, and this is how I'll just kind of go through it. IBB, XLV, IBB, KRE is the so we had banks. That's right. XLF and KRE. Those are KRE is the regional banking. XLF is like JP Morgan things. These guys have taken a huge nosedive. Typically, rates going up is good for banks, but kind of hard to say right now. It's not how it's been playing out for sure. So I might put this on the radar. XLB is the Materials Sector ETF. Also, what do I do? DBC is a commodity ETF. So either one of these, XLB, it might be time. We'll see. I'm gonna put DBC on this list. I didn't have it. Oh, maybe I did. But yeah, emerging markets. No, this is just Japan. I don't want anything to do with that. And utilities. A lot of talk about utilities being a safe haven, but I don't know. Biggest utilities in this sector are American Waterworks, right? And this chart does not look good to me. So if I see something like that, it's like I want to see confluence. I want to see this chart looking good. I mean, this actually might not be horrible. This is actually interesting now. So we got this. We got a little breakout here. Come back to retest a low. This might not be bad. What do you think, Steven? I don't know if this is option trader. That's what I could say.
That's kind of what I was thinking too.
Um, but from a positions like portfolio position, oh, can I do this? This is my little. I do this little. My I have my funny um, patterns. This is the Triceratops pattern, and it plays out just like this: up, down. Uh, but it's a great trader for sure. True story. Where is it? I'll show you. A B. We had this last night. So funny. And I was looking at this is the Triceratops pattern, and this is how it works, right? So you have your two little horns, and you have this big thing that goes up, and yeah, and that's where he is. And then,
So funny that it plays out.
but play both sides, man. That's all I can say.
Right.
Yeah, I'm a goofball. Sorry, guys. So XLU, maybe that's utilities. We'll take a look at that. NEE is also a good one. I've seen a lot of clean energy stuff, so it might be going in there. So Enphase is a good legit clean energy. Yeah. Let's see. I'm gonna take a look at this full set. Do you guys have any things you want to take a look at? So this is like a quick routine. Again, I don't trade opening Monday very much just because volatility is so fracking high. And I live on the West Coast, so I gotta be up at like 4 to trade that. Markel is up. So Dexcom actually goes into a little healthcare situation. This is probably your best of breed. They make the diabetes thing, so kind of interesting company. But this stock, look at that. That's amazing. Looks like it's a little basing, little inverse head and shoulders here. So again, stock trader though, he's a good one. Moderna, I think everybody caught this, or this caught everyone's eye this morning. This is a pretty big level, to be fair, on Moderna. So could this have some room to run? Yes, it could. And we have some earnings coming up as a catalyst towards the next month, so about a month away. This is ideal. If you want to go, I'll put this on the watch for sure. But 146.50 is what I'm looking at here. Tagging here. So if I want to see a retrace, because I'm a trader, right? So I like to buy a retest of, after break. So we're looking for a break in structure. So if your structure is higher highs and higher lows, or lower highs and lower lows, so you have a lower high, low, lower high, lower low, lower high, lower low, higher high, equal low. This is a high. Each one of these is a little high. So right now we have a clear break in structure. This is our prior high. Actually, this was the prior high. So if you want to get real, like minuscule, this is your, is it? No, this is your break in structure here. This is your first buy point, which was probably Thursday. And then you have the blast off. Thursday would be 136. So do I want it to retrace all the way there? No, I want to see this little 1-2 double top come back and get retested somewhere in this level here. And then I'll be looking to see if it'll start bouncing. And something like Moderna you could do. I will do a webinar this Friday on ratio spreads. This would be a prime candidate, something that just flies like crazy, that you don't want to put too much risk on, but you don't want to miss it either. BlackRock, no. I saw some payment processors going today. I think this is kind of where I would say, again, this kind of market, I'd rather be a seller at resistance than a buyer at support. And this prior support becoming potential new resistance. It's called the SR flip, or support, where support flips to resistance. Something to look at for sure. That said, yeah, we could probably tag this 340. Options trading, I don't know if that's going to be a big enough move. Can I pull that back? Yeah, I can pull that back. So around 340, I think it starts to fail. I hate to be Debbie Downer. God, UNH, this thing is crazy. This is the healthcare stuff, so this is where I go. Yeah, best of breed. Starting to kind of break out. So you could do, we got what, earnings on April? We can use this to our advantage. Might take a look at something like this and do a little, that looks more like diagonal spread to me. RH retail. Let's take a look at the bigger ones, big daily drivers. Just so, so by the way, if I'm looking really, I want to do multiple time frame views on all of this all the time. Oh, is this Lockheed? Does not look that great. So, this is my typical view. Oh, this is L3 Harris. Sorry. How's Lockheed doing today? LMT. Okay, so Lockheed, this is defense. Do we think that, you know, this is gonna, situation is gonna go away anytime soon? Probably not. But I actually, so here's your prior top right here, and this is why I always multiple time frame analysis. So I'm gonna sync this line. It's across all of the charts now. And so I'll do 15 minutes. Sorry, I'm going to clean this up for you guys. So weekly, daily, hourly, 30, and a 15. This is my one line. Prior top, synced all the way across. See how that lines up? Interesting, huh? So here, if we get this bounce and support and resistance, kind of like trampolines, right? So they'll push through and bounce up, push through, bounce up. So can we get another push through? And if I can get a value grab somewhere in here, I'll probably be a buyer. I like that. You want to be, so some people will say, hey, this is huge, giant head and shoulders. It's possible. But at least when you're doing something like that, right, if you're, let's say you're buying here, then you can easily have a stop that's pretty tight somewhere in here from a stock perspective. And that risk reward on a trade structure like that is pretty good. So that's just, we'll see. I don't buy anything until I see a setup, and that's not a setup right now. So we wanted to look at Tesla. So all right, so Tesla, oh, dumb city. Did you get that put in? Yeah, nothing
No.
but lower.
I got stopped out earlier, and then it kind of was trickling, and I didn't want to
Yeah,
lose it.
it's tough here, right? If you're shorting, it's like you're half of you is thinking, well, how much more downside is there really, right? You don't really know, but this is just my style. Take it for what it is. I don't call it, just, everyone has their own thing. What works for me might not work for you, but I trade pivot points, so to speak, or like I trade candlesticks based on supply zone being support resistance. And so, yeah, you could have seen 804, this pivot here, breakout. So bounce here, push, pivot. So this 1, 2 tells you that this is a supply zone, right, where the buyers stepped in really heavy. All of these buyers, right, are getting stopped out where? Right here, right? All right here. So anybody who bought this push, this is how you see it, how you read it, right? They're closing their positions. So could you go short term? Yeah, to 750 or even 7? You really could. 7 is a bit of a stretch. Typically, I'll just go to the next pivot low, right, which might be 750. And on a stock like Tesla, oh shoot, you tagged 750 this morning.
Yeah. Like 756 or something.
Wow. Yeah, if so basically I'd look at this. If we get into this kind of level, right? And we start seeing some weakness. I know 820 is a pretty significant level also. And you start to see some weakness, that's where I'd be looking to either sell upside calls or maybe grab some downside puts. That would be a better situation to me in my unprofessional, just another dude talking about the charts. Amazon. You see, I think Amazon's going to be doing its own thing for right now. We have like this value kind of area, or i.e. resistance. This red box was prior. Oh, look at that play out. Supply zone, right? Again, resistance up here, right? In this kind of market, we want to do what? We want to sell at resistance. We don't necessarily want to be buying at support. So, while most people would have looked at this and said, "Oh, this is a bull flag," you know what this reminds me of? This reminds me of that that amazing Bart Simpson crypto pattern. Where's my drawing tools? Right, right. When you got the little
I know
spiky
what
hair.
you're talking about.
So,
Yeah.
so basically, what this is, right? Why does this happen? It's like a stock needs what to go higher? They need buyers, and if they don't have buyers at this level, this is what happens. And eventually, they just give up, right? You tag this little support right here, and anybody who was caught trying to go long because of a stock split or something like that calls it, right? And especially, yeah, this might be a nice one. Calls it to 27.80 in the very near term. I might be hitting this today. So I got a bunch of trend lines here. So what would I look for? I would probably look for a little bounce, and a retest somewhere in here. Could probably even go up to here, and that's something I'll be looking at for sure. I like that. Might just free fall though. You never know.
Yeah.
But yeah, so I had a trade on this short not that long ago. Well, like basically when the news came out, and I saw this, it was like, how do you trade the news? You trade the news like if something comes out that's supposed to be good, but the stock is not acting good, well, you short it. That's it. Simple. Same thing. Like if something comes out that's supposed to be bad and the stock is going up, you go long. Simple. So yeah, this will be a nice short this week for sure. That's just me. I don't have any bullish sentiment on Amazon personally, though. So I think that's it. I think we got a little bit over. I think we are good. No requests right now. So cool. So that's what we do. That every Monday, just kind of take a look at what are some trade setups that we can see. Really the indices overall are the biggest things that we want to take a look at. Have an idea of what's to come for the week and plan our trades out accordingly, knowing what we need to be looking out for. So. Hope that helped, guys, and I will see ya later. Adios.